What is a Schedule I bank? A Schedule I bank is a Canadian domestic bank that is not a subsidiary of a foreign financial institution. It receives its designation as a Schedule I bank from the Canadian federal government and is listed in Schedule I that forms part of Canada's Bank Act. The Bank Act is the federal regulatory statute for banks in Canada, including Schedule I and II banks, as well as authorized foreign banking in Canada. Schedule I banks are Canadian corporate entities incorporated or continued under the Bank Act, which are authorized to engage broadly in the business of banking and related businesses, including the provision of specified financial and investment services. Schedule I banks are limited in the scope of non-banking commercial activities in which they are permitted to directly engage, which leads to non-banking enterprises being carried out through their subsidiaries. Schedule I banks are subject to stringent ongoing supervisory and reporting requirements emanating from the Canadian Minister of Finance and the Office of the Superintendent of Financial Institutions. The Schedule I banks include the major chartered banks, regional banks, and online financial institutions. However, it does not include the majority of credit unions and most government-owned financial institutions, which are regulated by provincial and territorial governments rather than the federal government. There are just over 30 Schedule I banks in Canada, which includes 8 chartered banks that are some of the country's largest banks: RBC, Royal Bank of Canada; TD Bank, Toronto Dominion Bank; Scotiabank, Bank of Nova Scotia; BMO, Bank of Montreal; CIBC, Canadian Imperial Bank of Commerce; National Bank of Canada; Laurentian Bank of Canada; and Canadian Western Bank. Thank you.